Hello and welcome back to TLDR.Finance. This is part of the trading journey throughout the year. Going to do a weekly update here, how trades went for the week, what did I trade, maybe some mistakes that may or may not have happened, and just kind of keep you guys along for the ride on the year and hopefully what is going to be my best year ever. So a little slow, of course, being the new year. I'd say a lot of the majority of my wins last year, at least, were all from earnings plays. So we'll get into those as they come up. There's not a lot of them in the first week of the year, and really in January in general. So not a lot of activity there. So I do some of these longer term trades, 30, 45 days to expiration, spreads in some form or fashion, calls, puts, iron condors, just to keep things fresh, keep me entertained, and also just keep tabs on the market. If you place a trade for the day, it means you probably looked at the basics. You checked the news, you looked how the S&P is doing, how the Dow is doing, how tech is doing, and it just really helps to keep me ingrained in what's going on. So jumping right into it, we've got our lovely thinkorswim platform here, and I'm going to start with the scan. So I did have one earnings play. Micron Technologies had earnings this week, so I did play that. It was good, profitable trade. Could have been a lot better, of course, but in hindsight. But the majority of the trades, I actually started putting a couple on the 31st of December, and then a couple more throughout the week that are all spread trades. And so we'll start with actually how I find those trades first. So in thinkorswim, you can create a wonderful scan. And so this is the one I created. So pretty straightforward. All I'm looking for is implied volatility is above a certain level. That's this line here, 70%. Volume is at least X traded, so the stock has high liquidity, which means I can get in and out of the option without much slippage or spread issues. Price is at least $100 or more, and then days to expiration 30 to 45, and that it does not, this one bit me in the ass in 2018, that it does not have earnings coming up in at least 25 days. Just because earnings starts to inflate volatility. Obviously, after earnings, things crash and go which all the ways, up, down, sideways, that you can't really control due to a binary event. So I try to avoid the earnings there. And so when I scan that, you can set this to pop up in a watch list. So that's what this list is over here. And I have it filtered right now by implied volatility levels and also by implied volatility percentile. So I switch between the two because percentile is based on the company itself. If Amazon's always usually at a 20% implied volatility, but now it's at 25, that doesn't seem very high. However, implied volatility percentile, it might be in the 90th percentile for what it is because it's normally well below 25%. So I flip between the two to see just what's going on and help me find some things outside of tech is usually why I ended up using it. 'Cause there's a lot of tech, IT, software firms that are always moving around quite a bit more than like your Caterpillars, your Boeings, etc. So um, then I recently added this final column here, which is industry, if you can't see that, just to help me try to get away from being so tech heavy and getting to more consumer staples, biotech a little bit. That one still kind of hurts, entertainment, etc. So just help diversify the portfolio a little bit. So that being said, here's the current positions. So shortly here, I have a long-term play on QQQ from last March. I'm waiting until long-term gains kick in here in April so I can close this position out. I bought some long, poor man's covered call is what this is. I bought some leaps at 150 back in March on QQQ, which is the NASDAQ ETF. Those did really well. However, I was also selling covered calls against them to kind of hedge the bet, ultimately to pay for the call itself and this long call here, and then have the long call free and clear with whatever profit was left over. QQQ, of course, took off, so this is deep in the money. I've just been able to roll these out about every 30 days to get a little bit more credit while I'm waiting for April to come around, so I can just close this entirely and free up all this capital to use for what I normally trade, which we'll get to in a minute. I had some shares of TLT, mostly just for delta offset to make sure the portfolio is kind of neutral. as far as I don't care if it goes up or down, purely for that QQQ position. We're going to get to SPX in a minute because that's one of the mistakes that I may have mentioned earlier. So we've got some put spreads on SPY. This is one of the core positions. SPY is the ETF for the S&P 500. I usually have some form of fashion of put spreads on it because ultimately, I mean, I want the market to go up and slowly to the right, or at least flat. And so that's just been a good trade to have on, and that one's currently profitable. Haven't had to do anything with it, so just kind of waiting now. It's the dip the last day or two. It's been close to profit target, but not quite. So it's been fluctuating, but it is only about maybe 10 days in. I typically hold trades in this fashion anywhere from 5 days to 15. So we got a couple days still, and it's like I said, it's doing great. It needs to stay above 360. S&P right now is almost 380, so it's doing great. Alibaba, this came from my watch list over here for high implied volatility. I did a put spread on it, and that one is, we'll get to in a second, I'll show you, but I decided put spread versus calls or an iron condor because of how the chart looked at the time. So we'll show you here as an example what that looks like and why I chose puts over calls. That one's looking good as well. It has fallen a little bit. Right now it's at 226. I need it to stay above 210 or higher to do well. So it's still in good shape. Just waiting for more time to pass. BIDU again, quite a few Chinese ADRs in this last round, which I'm not real happy about it looking at it now, but it's been okay. So I actually rolled this one out. So BIDU originally put on a 245, 255 call, again because of the chart, so we'll look at this one later. It's been going against me. So right now, BIDU this today closed at, it was up $21, which is not ideal, but 241. So it's getting pretty close to putting me in the money and potentially causing some trouble. So I rolled it out for a small credit to 45 days again. So now almost another full 20 days longer than the original plan. But that's okay because I got paid for it. So the max loss has actually gone down a little bit. And ultimately, I think over the next 45 days, I'll have more time to be right with BIDU staying below 245. Pinduoduo call spread again. That one's doing pretty great, down to 170, and I'm trying to stay below 205, so that's doing great. Again, all these came from this watch list percentile over here. Sarepta Therapeutics. This one's already taught me a lesson for the year. I think, especially with therapeutics companies, I need to do just a little bit of fundamental analysis in the sense of at least look at the news, more so than just what's on the platform. If you can see this down here, this isn't always as up to date as it could be. So a quick, Twitter search or something, what's going on with therapeutics? Because about 2 days after I put this on, we can see here real quick. It did a wonderful swan dive. Oh, that's not what I want. Well, that'll work too. See, it's up here on the 7th, way down here on the 8th. So it came out with some bad news about one of its tests. Luckily, I did a very wide iron condor, so I don't need it to recover too much to get back into the profits. I rolled down the call side to get myself a little more credit. To reduce the max loss on this as well. But if we can get back above 120 in the next 24 days, then that is pretty golden for me, which is about maybe halfway, a little less than halfway from the fall that it did. So we'll see. Zoom did a covered call, or I'm sorry, an iron condor. And so this one's looking pretty. It's got to stay between 305 and 395. It's currently at 357, almost dead center. Money going real well. Amazon, another core position. I just love Amazon. They do a great job. They're a huge stock as far as price is concerned, so they're always bringing in decent premium. I think on this entire spread, I brought in $564 because I did roll it today. Because it has dropped a little bit. Still not in the money, so that's good. But I wanted to bring the call side down a little bit to get some more credit for it. But it's a $10 spread. I've already made over half the credit and still got plenty of time, 31 days, for it to pop a little bit and just get right in that wheelhouse. So that'll be, I'm sure, great. Amazon's always been nice to me, except for earnings trades last year, but that'll be in another review video of last year's results. So Home Depot, very happy to finally find some consumer staple retail stuff that had some volatility that was high enough to sell some calls on. Obviously, it's at 276 right now. I wanted it to stay below 275. I just rolled it today for a little bit more credit, which was good. So I got some more time, 66 days. So over 2 months to hope that Home Depot either stays at the price it's currently at or falls a little bit or a lot, and we'll be in the money. It'd be great. So RUT, another core position, similar to the S&P. I ultimately want the market to just go, I guess it's this way. There we go. If we're looking at that, maybe it's mirrored. I don't know. Up and to the right is what I want the chart to do and the economy to do over time. So the SPY is the 500 largest stocks. The RUT is the Russell 2000 Index ETF, or the top 2,000 companies. So just a little put spread on there. That one's going pretty well as well. FXI, China ETF. So this one I got from Option Alpha. You'll learn more about them in a bit. They're actually who got me started and helped me with option trading as well. On their premium service, they have a signal service sort of thing where they'll send out trades. So I'm testing that out because I absolutely love Option Alpha. And I feel terrible that I'm forgetting his name, but that's okay. Great guy over there. Felix? No, it's not Felix. Anyway, so got this trade from him. It is an iron fly, where it's an iron condor, except it's just two. You're selling this 47 put and call. So it kind of looks like a fly if you were to graph it. That one is actually doing quite well as well. It needs to stay around 47, and it's currently at 48. So doing pretty well on that one also. Ooh, the oil. Oil took off, so that sucks. But I had an iron condor on this as well. It needed to stay below 180 and above 125, 135, excuse me. So I just rolled that up to have 165 to 180 now to get a little bit of credit to offset the loss, or the max loss potential. I've got 38 days. It's really not at a max loss yet because it's at 186, so right between my 180 190s. But I'm feeling pretty good. I haven't heard anything from Option Alpha as far as adjustments yet. This is how I adjust. So I got their suggestion. I liked it. Having, again, some oil, getting away from the tech and the IT and all that. I like to have that. TLT, this is the bonds. So Option Alpha also, again, suggestion here. They submitted an iron fly again for TLT. This one's doing okay. It's fallen a little bit off the 157 mark that we want. But again, market screamed ahead. Everyone's getting pretty excited about the market, so bonds are coming down, especially with interest rates and that. Not ideal, but still we got almost 40 days, plenty of time. And finally, XBI, which is biotech ETF. So I just rolled this one out as well. It's a 155 call. Sorry, 150, 155 call. I want it to stay below 150. Today it closed at 149.35, so getting kind of hairy, but we've taken in some good credit, and so just giving it time. Again, we got 66 days to see what happens with that, so plenty of time. And that's pretty much it on the piece. I did want to talk about, let's see, I placed, I think like 21 orders this week. Yeah. So 21 orders with 23 fill. That's mostly our earnings play. So you'll see this micron filled 4 times. But ultimately 21 trades over the last 9 days. Really only 7 because the weekend is in there, right? But yeah, so 2 things I want to point out. One, we had an earnings play. Micron had earnings on the 7th in the after hours. So I like to do iron flies on those, make sure it stays roughly within its given range based on the option pricing model, Black-Scholes or Bjerksen Stenlen. What's it called? Bjerksen Stenslen. Yeah, that was pretty good, pretty close. And so based on that, they have 1 standard deviation moves, 2 standard deviation moves. I like to play options based on their 1 standard deviation moves. So in Thinkorswim, it's on the option chain. So if this was the earnings week, this number would be 75% implied volatility. I usually shoot for 70 and above, so that's good. And this plus minus is how big the expected move is within one standard deviation. So BIDU 68 point whatever the standard deviation number is. Actually, it's 68%, right? And then 91, and then 98 point. Anyway, so almost 70% of the time, if I had a position where I had a high and a low band, oh, here's the camera, high and a low band, 50 points or higher, up or down, then I should make money after BIDU earnings 70% of the time. That's how I usually trade earnings. Got to stay within the range 70% of the time. And last year, I think my number was 69.4. So pretty darn close. So with micron, like I said, it went pretty well. Let's go out 30 minutes just to get you a little visual here. So they had earnings here. In the evening, I sold the 79s, I believe, with a 6-point spread. It was expecting a 6-point move up or down. Opened up big, of course, so I set for a small gain of a couple bucks right at the open based on the credit I received. So I got a 380 credit, so I set an order for about 360, 350. And it did trigger right away, which, in hindsight, I would have loved to hold on to it, but after review, because I did trade this from bed, so I kind of fell asleep because it didn't look like it was going to go well. I set the order, forgot it on purpose. That was all intentional. And then, of course, when I woke up later, I was kicking myself. But this huge high test, that could have been a max loss trade easily if it had kept going. You never know that it's going to do this. That's the point of earnings. I'm playing the volatility crush. Micron at the time had, let's see here, 122% implied volatility. The next day it was something around 50 or 60%. So if it were to stay the same, probably half of that 380 was volatility. So when that crush happens, it's all I want. I'm not trying to bet the move one way or another. And so I made about 120 bucks on that trade. Pretty good for 3 to 5 minutes of actual work, setting the trade up and taking it off the next morning. And that's typical options. Now the one mistake I've made twice now is SPX. So I said in this account this year I would not trade long options, especially day trading. I don't quite call it gambling because I made a bunch of money off this stuff last year, but it's just not consistent. Really messes with my emotions, high, low, depressed, I'm exhilarated, excited. So I don't like to trade them in this account. I'm setting up another account. It's just taking them forever to get an LLC account set up. So today, luckily, was a good trade. Followed the rules as far as my long options. Made 330 bucks in a couple minutes while laying on the couch again today because I got it. I sat down on my computer. I saw it. I did the setup. I preset the orders for both entry and exit, good or bad, and it triggered on its own. And I got to walk away, and I got a notification on my phone saying I made 300 bucks. Perfect. That's how it should go. Now the other day, which was Friday. Oh, no, it's just Thursday. So Thursday, I thought I saw something as well. Placed some alerts. The alerts were triggered as far as price falling below a certain point. And ended up losing because I did it twice, of course, because I thought I was right the first time. Turns out I was wrong. Thought I was right again. Yeah. So placed the trade, and actually the second rule I broke was I placed the trade. I was up 150 bucks in about 30 seconds. Normally that's another rule. If I'm up any sort of double-digit percentage, I think it was about 11 or 12% at the time, within a few minutes, get out. Regardless, just take your money and run. Be happy about it. I was hoping for about 1,000-point move, $1,000. Of course, it didn't happen, so it came against me. So I lost 700 bucks there. So net for the week, I'm only down about 400. And then all the other trades I mentioned before, that some are troublesome, some are still just working themselves out, but I'm down about 1,600 bucks so far for the year. And I think part of that is actually withdrawals. So I do withdraw money from this account on a on a weekly basis. So it looks like in 200 of the 1,600 bucks is withdrawn funds. So I believe another. Oh, the second one probably happened. Yeah, so the second one was on the 31st. So the 31st, I also lost. I took out 200 bucks. So 1607 is losses for the year, with 400 of that being withdrawals that are sitting in my checking account. So not that big a deal, especially for the first part of the week. Got some earnings coming up. I'm excited to keep updating this, and definitely let me know your comments. I'll try to add a bit more of some of the background of what I'm doing, like I did the scan stuff today, um, with each of these update videos. And yeah, definitely let me know what you think. Appreciate the coming back and checking it out and being along for the journey. And like and subscribe. Have a great day.